What's going on, everyone? What's going on? What's going on? Here, let me go ahead and get this YouTube link out there before we start, of course. Let me see. Check up on YouTube. There it is. Perfect. All right, let me see. Let me make sure everything's looking good. Boom. Bet. Perfect. Let me start up the call here in the Discord. It was good, everyone. Oh, here. What's up, guys? What's up? Here, let me go ahead and disconnect you real quick. All right, there we go. There we go. Okay, so let me see. Let me put this out. What's up, everyone joining? What's going on? What's up, YouTube? What's up, Discord? Here, let me go ahead and put this out real quick. The link so people can see it. Let me see. All right, there you go. Okay, so what's up, guys? What's going on? What's up? What's up? What's up? Okay, so in today's class, right, is gonna be actually very special one, or not special, but like more informative. You know, it's just gonna be a really good class, right? So I'm sure for those in the premium or for those that pretty much read the announcement, you guys saw that we ended up catching a 200 and no, it was 200 points, right? We caught a 200 point trade, right? And let me go ahead and show you guys this trade right now, right? And what's up, everyone joining up? What's up? What's up? So let me go ahead and screen share my entire screen so I can show you guys exactly what we caught, and I'm gonna show you guys exactly how you guys could have caught the same exact move, the same everything, right? So let's go ahead. Let me go ahead and pull this up, right? So for those that don't know, we ended up catching by far my biggest trade out there. And my entire usually I catch like 100 points, you know, 150 points max. No, today was 200 points, which is the most I've ever done, right? And I caught it all on live, you know, while live trading. So here's the trade, right? So you guys can see right here, we ended up catching NQ longs right off open today at around like, what was it? It was around like 1990, around there. Yeah, like 1989, right? Long story short, we worked around the entry and we ended up sniping a 200 point trade. You guys can see it right here, and I'm gonna break down exactly how you guys could do it. It's really nothing new, which is so simple to do. This class shouldn't even take that long, right? Because I just want to review this, but I want to show you guys exactly how I did it and how you guys could do it in a day like today or in a day like every day, because you guys know I trade this strategy every single day, right? So you guys can see, once again, you guys can see 200 points on NQ. We ended up hitting, you know, 155, but of course it went higher into 200 points, right? So let me break down exactly how I managed to catch this trade from A to Z, and I promise you guys it's gonna be amazing, right? So let's go ahead and get started. Let me pull up the chat here in the premium. And by the way, everyone, welcome up. Thank you so much for joining. I don't want to hold too much of you guys' time. I just want to get this review one and done, and we can of course go into tomorrow, right? So by looking at the screen share, right, what's the first thing we're able to identify? Well, before we do anything, we want to go ahead and find the levels of liquidity as per usual. You guys know the first thing we always do in every class is we go ahead and find the levels of liquidity so we're ready for that day, depending on what the market does, upside or downside, right? So in this case, since we know that right off open, the market trend is currently looking pretty bearish, right? What we're going to be looking for is drawn liquidity to the downside. If the market wants to keep going lower, we want to know exactly where the market will go down into, right? And I don't know. Let me know in the chat. Would you guys want me to give you guys an example on how to find drawn liquidity, or do you guys kind of already understand it? I mean, I pretty much cover it in every class, so it's kind of, you know, like a repetitive thing. But let me know. Let me know in the chat. Let me know if you guys would want me to review it. It doesn't take any more than like 2 minutes. Example, perfect. Okay, got it. So let me give you guys an example before, of course, before we start. So the first thing, or pretty much the main thing into finding liquidity, is it's all about the trend in the market, right? You guys know that there is two trends that could possibly happen: either a bullish trend where the market goes up, or a bearish trend where the market goes down, right? So in this case, let me give you guys an example of a bullish trend. As you know, in the setup, the trend was bullish, right? So how does a bullish trend look like? Well, it's not like this where the market only goes up. No, a bullish trend actually looks like this, where the market is steadily going up as time goes on, right? Like this, right? So what ends up happening here is every single low that the market creates in an uptrend is known as drawn liquidity, right? So every single bounce that the market has is going to be a level of liquidity. So in this case, we have a few bounces. I believe it's around 4 to 5 bounces, 4 bounces right here, right? So each and every single one of this bounce, as the market is progressing to the upside, this bounce is going to be known as drawn liquidity. Why is it known as drawn liquidity? Well, you guys know that when, let's say for example, if the market trend is bullish, ideally what you guys want to do is go ahead and enter longs, right? So let's say for example, we want to go ahead and enter longs right here. Why? Because we know that the market is going up. Usually what we're going to do is when we enter longs, we're going to go ahead and place our stop loss at the most recent low, right? Where's that low going to be at? Well, it's going to be at where the market recently bounced from. So it'll be set right here. Then of course you set your price target wherever you want, and just like that you have this level as your stop loss. Now keep in mind, you're not the only trader in the market. There's actually millions of traders in the market every day, right? So you're not going to be the only one placing your stop loss at this level, right? So when we have such a big level that is being respected by the market, a lot of people are going to be using that level as their stop loss. What ends up happening? Well, it creates a lot of open orders. As you guys know, what stop losses are is open orders, pretty much telling the market that if price goes below this, you want to go ahead and sell your contract, right? So that's pretty much what's happening here. This level has a ton of open orders, which is pretty much money waiting to be filled in the market, right? So what ends up happening is when the market, of course, the market's not going to be going up forever. Pretty much when the market ends up reversing, right, which it will eventually, what ends up happening is it will go ahead and target every single one of these lows, right? It'll go ahead and fill these orders. Once these orders get filled, then the market is going to pretty much rinse and repeat. But in this case, we're going to be filling the drawn liquidity to the upside, right? And that's why the market goes up and down every single day. This is a prime example, right? So once again, a quick recap, right? Let me go ahead and delete this. Every single one of these lows is going to be known as drawn liquidity. And let's say, for example, we have a downside, right? Like a downtrend. Every single high is going to be known as drawn liquidity. So every single rejection that the market has to the upside is going to be drawn liquidity, right? So the meaning of this is, in the market, think of drawn liquidity as a simple magnet concept, right? The market wants to go ahead and fill all these orders, pretty much sitting at these levels, right? So think of each level as a magnet. When the trend goes from bearish to bullish, ideally, we're gonna get a what's it called? We're gonna get the liquidity sweep, or not sweep, but we're just gonna take out liquidity. So every single one of these orders, they're gonna go ahead and get filled, right? So keep that concept in mind, right? Now, let me see. What's an MSS model? Good question. So this right here is it's known as a drawn liquidity. Here, let me drink some water. So this right here, let me see. The more touches, the stronger the magnet. Exactly. Why? Because, okay, the more touches a level has, the more respected the level has. The more respect the level is, the more respected, right? So what ends up happening is when people are starting to see that this level has a lot of bounces, of course, everyone's going to trade this level, right? And what's going to end up happening is they place your stop loss at that level, which creates more liquidity. The more liquidity there is at a certain level, the stronger, the more likely it is that the market is going to go ahead and sweep that level eventually, right? So for example, right, keep this in mind. I'm going to go ahead and screenshot this and post it here in the chat. And by the way, guys, I'm seeing some people in my YouTube asking me if this is going to be recorded. So for those that do want the full recording once the live is done, here's the link to the YouTube, right? If you guys do want it, here it is, right? If you guys want, feel free to subscribe. It's, all my classes are all on there, right? But anyways, what we're going to do in this case is, hold on, because I think I put the wrong thing right here. Let me see. Okay, no, I put the right one. Perfect. Let me see. Okay, yeah. Okay, so what is a good example of a stronger level of a magnet? Let me see. Hey David, by any chance, can you explain how you determined that the bias was not bearish, like you said in the alert? I got you, Space. Actually, this is actually really easy, and I'll show you guys exactly how to know what the current bias is, even if the market is doing the complete opposite, right? So it's going to be like a little cheat code, but I promise you guys, it's super simple, right? But anyways, this is known as drawn liquidity, right? Each and every single high in a downtrend is known as drawn liquidity, and we're eventually going to get taken out, right? But how do we know if a level is weak or if a level is strong? Well, so pretty much like, who was it that said it? Let me see. Like Katie said, right? The more touches, the stronger the magnet, or the stronger the level, right? So let's say, for example, that the market trend is currently in a bullish trend, right? So what we're going to do here is the market is in a bullish trend, right? It's going up, and then we found a strong level of resistance, right? Which means that the level just can't break above this high up here, right? We got a few rejections and the market went down, right? So what ends up happening here is when people start seeing that the market is struggling. Hey, what's up, Benji? What's going on? When people see that the market is struggling to break above this certain high, which in this case would be this high right here, right? They're going to be like, okay, well, sellers are getting weak and it seems like, I mean, buyers are getting weak and it seems like sellers are going to step through, right? So what ends up happening is when a ton of traders like us see this, we're going to go ahead and short the breakout. Where would the breakout be at? Well, it'll simply be right here, right? We broke above, I mean, below the support line. So ideally people will go ahead and enter shorts, right? So when people go ahead and enter shorts, what ends up happening is, of course, they're going to go ahead and place your stop loss at the recent high where the market is currently rejecting from, right? So pretty much the more rejections a level has, the stronger the level is, right? So what ends up happening is, of course, when the market finishes doing its thing, of course, we're going to go ahead and reverse back up, right? So now when we're reversing, what levels will get taken out as the market goes up? It's actually really simple. You're going to look for every pullback that the market had as it was going down after the rejection of that triple top, right? So you're going to have 3 price targets in this case. You're going to have drawn liquidity number 1 right here, right? So I'm going to put DOL plus PT. PT stands for price target, right, which is what you will be targeting if you enter the longs, right? You have PT2 up here, which is where the market rejected from before it dumped, right? And you will have PT3, of course, at the high up there. What will end up happening is the market takes out this one. If the trend is strong enough, we're going to take out the second one. And of course, if the trend keeps on holding, we're going to go ahead and stop out everyone that had their orders placed at this high up here, just like that, right? So that is exactly how you find drawn liquidity, and that's exactly how you pretty much trade drawn liquidity, right? So let's go over to the example from today, and Space, I'm going to go ahead and answer your question right now, right? So let's go back into the trade that we pretty much took today, right? So right off open, you guys can pretty much clearly see that the trend is pretty bearish. I mean, it's been bearish all week, right? So what can end up happening? Well, if you guys go on the higher time frame, such as the 1 hour time frame, you guys can pretty much see that if you expand your time frame, or your chart, you guys can see that the current market trend was pretty bullish, right? So how can we actually go ahead and chart this? Like I showed you guys with drawn liquidity, it's extremely simple. What you're going to do is you're going to mark out every single low since the market is currently going up. You're going to be marking out every single low that the market created as it was going up, right? So in this case, it will be like this and like this. And of course, the other ones that I have marked out, which will be this low, this low, this one, this one, this one, this, and so on, right? So we have a ton of levels of liquidity as the market starts going down, right? So how are we going to play this in this case? Well, there's sort of a pattern right here, right? So Space, I saw you just asked that. Let me read the question once again. By any chance, can you explain how you can determine that the bias was not bearish even though the market was dumping? So let me show you guys exactly how I knew how the market was not going to continue dumping, right? So the pattern in this case, right? You guys can see that right here we have 3 levels. These levels are very close to each other, and then the next level of liquidity is actually at 18,800. So how did we know that the market was going to actually bounce off this 940 level and not 800? Well, main reason being is because these levels are so much closer to each other than 800, right? So let's go into the current market structure, right? So in this case, hold on, let me see something. Let me see, hold up. Okay, so right here, what we could do is, what's it called? Okay, so the market trend is pretty bearish, right? And as the market is going down, you guys can see that we have this fair value gap right here. How do we know it's a fair value gap? Well, can this be applied to stocks? Yes, this can be applied to any market that you want to trade. Could be Forex, could be crypto, could be options, could be futures, could be stocks, could be anything, right? So yes, it can be applied because what we're trading is volume and liquidity in the market. You guys know the market moves based off volume and liquidity, right? So if you're able to understand it, you know exactly what the market will do as it goes on, right? So in this case, right, as the market is going down, for those that do know about fair value gaps, you guys will know that this right here would be a pretty valid fair value gap. What's a fair value gap? Okay, well, I can't really teach that right now because it's a whole different topic for another day. But if you guys do want to learn about my fair value gaps and exactly how to read them, here's the link to my YouTube, right? So of course, if you guys want to go ahead and you guys click on the YouTube, what this will do, you guys click on the live and all my explaining is all here, right? So if you guys ever want to check out my lives on, you know, fair value gaps and all that stuff, it's all explained right here, right? Because once again, you guys can see how long these classes are. I'm not trying to have a 3-hour class, right? But yeah, pretty much what ends up happening here is the fair value gap would be this candle right here, which created an imbalance, right? So how do we know if this is going to be a valid fair value gap? Well, for those that do know what a fair value gap is, the way you know if they're valid or not is on NQ, right? Which we are trading NQ in you know, for today's trade. What you're going to do is you're going to measure the candle from the complete top to the bottom, and if the candle is more than 40 points, then it's going to be a valid fair value gap, right? So here, let me go ahead. I clicked out on this by accident, right? So here, let me go ahead and select this once again. Hold up. There you go. Okay. So in this case, this fair value gap, it's definitely more than 40 points. How do we know it's more than 40 points? Well, first of all, you got to measure the entire candle, right? When you guys measure the entire candle, the number you guys want to be looking at is going to be this 87.25 level. And this applies to any candle, right? So in this case, this candle is 26 points. This candle right here is 70 points, and so on. So if the candle is more than 40 points, it will be a valid fair value gap. Right, so how can we trade this? Well, now we know that we have the candle that we want to actually trade. What we're going to do in this case is we're going to go ahead and mark out the entire FEG, which will look just like that, right? You mark it from the complete top of the first candle to the complete bottom of the first candle to the complete top of the third candle, right? Let me see. Hold on. Okay, so now we have the fair value gap in this case. What are we going to do right now? Well, let me see. What do you mean by points? Okay, so when you guys are trading futures, for those that don't know, when you guys are trading futures, it doesn't go based off the dollar amount, right? Right here, it might seem like the price of the future is $19,000. No, it is not, right? This, for futures, it's known as points. It's not known as dollars, right? So in this case, if you guys are trading stocks, let's say you guys are trading Tesla, for example, right? Because I know a lot of you guys like to trade options and all that stuff, right? This candle, for example, this candle would be about $1.17, right? Because you're trading the stock market. In the futures market, it does not go by the dollar amount. It goes by points. It goes by ticks and points, right? So if you guys are trading NQ, which is pretty much what I trade, in this case, this will be known as a 96-point fair value gap, right? So that's pretty much what it is. Now, what can we do in this case? Well, let me go ahead and bring this back. So now that we know that the fair value gap is a valid fair value gap, right? What we're going to do in this case is we're going to look for a simple draw on liquidity sweep, right? Now that we know that the market is dumping like crazy, we're not too interested in taking any more shorts as it's going down, right? Keep in mind, we don't have any setups or any entry points. How much is 1 point? On NQ, I believe how much is, it's $20 per point. Yeah, $20 per point. If you're trading a micro, it's going to be $2 per point, and so on. Yeah, and you just do the math there. How many points is a valid fair value gap on ES? It'll be 10 or more points, AJ. So if you guys are trading ES or you guys are trading SPY, any candle that has 10 or more points on any time frame would be a valid fair value gap, right? So okay, in this case, you guys can see that we have, of course, the drawn liquidity that we're taking out as the market is going down. Was about to ask us, thank you. I got you, right? So as the market is going down, right, we're taking out liquidity, and each level of liquidity that we take out is a higher chance of the market forming an MSS model. What is an MSS model? Pretty much it's known as a market structure shift, pretty much telling you guys that the market structure is shifting from being bearish to being bullish, right? As you guys can see, the market is selling off, and of course a market structure shift will mean that the market goes from selling off to pumping up, to getting bought up, right? So what we can do in this case is, now that we, hold on, I switched out again. Now we know that the market is going down, what we want to be looking for is a market structure shift, right? So you guys can see right here, right? And space, this is where your thing, let me see, where did you get those two white lines near the bottom of the candle? Okay, let me show you, right? So if you guys just joined, if you guys go, okay, when you guys are looking for drawn liquidity, right, the higher the time frame, the stronger the level, right? So if you guys expand your time frame, like for example on the 1 hour time frame, you guys can see that right here we have some levels of liquidity nearby, right? So we have 994, we have 974, and we have 940. Why? Because in the current uptrend that the market was in, each and every single one of these lows was the lowest point that the market went to before it pumped up and it went higher, right? Creating liquidity. Now, keep in mind, we never retraced into these levels until today. So of course, when we were looking at the market today, we were paying attention to these levels right here, right? So when we're paying attention to these levels right here, what we're pretty much looking for is going to be a simple, a simple sweep, right? So space, just like how you said, right? And matter of fact, let me show you guys the commentary, right? So it can make a lot more sense. So let me go ahead and pull up the commentary right here. Okay, so by looking at my screen share, right, you guys can see that I told everyone at 10:08 in the morning, I told everyone looking at NQ coming into market open. For now, it does seem like NQ is selling off, but my bias is not bearish, even though the market is selling off. So you might be wondering, hold up. You guys might be wondering, how how does he know that the market is not going to keep selling off if right now all we're getting is selling candles, right? And trust me, guys, I'm not, I can't predict the future or anything. It's pretty much as simple as reading what levels the market is currently holding and if the market could currently bounce from it, right? So, long story short, what I told everyone is after NQ sold off into his drawn liquidity today, this gives NQ the chance to take out drawn liquidity, sweep it, and go ahead and flip back to bullish as it forms the MSS model, right? If NQ can go ahead and form an MSS model, we can expect upside into the drawn liquidity above. You guys remember how I told you, if the market is currently in a downtrend, we're going to be marking out the highs as it's going down. Where will the highs be at? Well, in this case, we have two highs marked out, right? The only two highs that we have currently or nearby would be this high up here at 19,244.50, and we have this high up here at 19,206, right? So why do we have these highs? Just like how I said, as the market is in a current downtrend, which it was in today's case, right? As the market is doing this, each pullback that the market has is going to be drawn liquidity, just like this, right? Just like that, right? So we have three levels of liquidity in this example, right? Let me see. Can I ask how do I know how many ticks a fair value gap on different instruments? There's no way in really telling it. You just need to backtest it and see how it reacts off each and every single one. It could be NQ, ES, gold, whatever you might be trading. You need to backtest it and see what point system works. In my case, on NQ, it's 40 points or more. On ES, it's 10 points or more. I don't trade gold, so I can't really tell you how many points it is for gold, but a little bit of backtesting will pretty much solve your problem, right? So now that I got this example out of the way, by looking at this, we know that the only two levels of liquidity we have to the upside would be at 19,206 and at 19,244, which is why I told everyone, right? If NQ can form an MSS model, we can easily see 19,206 and 19,244. You guys see it in the chart, right? So how exactly are we going to play into these levels even though the market is dumping, right? We're looking to take longs, but the market is extremely bearish, right? So what I told everyone here is by looking at NQ on the 5-minute time frame, you can see that NQ created this 5-minute bearish fair value gap on the way down, right? And you might be asking, well, it's a bearish fair value gap. How exactly are we going to be going longs off a bearish fair value gap? This is where my inverse fair value gap model comes into play. Now, I'm seeing a lot of heads in here that you guys have been in my previous classes, so you guys know exactly what my inverse fair value gap model is. For those that don't know, right, let me go ahead and give you the video so you guys can, of course, watch it for yourself and learn for yourself, right, for my inverse fair value gap. So it will be this one right here, just like that, right? And for those wondering what an MSS model is and drawing liquidity, let me go ahead and give you the video for that. It'll be this one right here, right? So these two videos, we have drawn liquidity, we have MSS, and we have my inverse fair value gap model, which will be placed in these two videos, right? So okay, now here, let me go ahead and keep reading this. So back to the commentary, right? Pretty much what we're looking for here is going to be a simple inverse fair value gap. So how's this going to look like? Well, what we're going to do here is we're going to wait for the market to go ahead and sweep this low right here. You guys know the only three levels of drawn liquidity that we have nearby is 944, 974, and 940. In this case, you guys can see that we went ahead and took out every single one of these levels, right? So if you guys zoom out, you guys can see that the market doesn't have any more room to go lower, meaning that the market ideally is not guaranteed, but ideally it does not want to go lower as it already filled most orders nearby, right? So if we filled all of the orders to the downside that are nearby, we want to go ahead and start looking to take the orders to the upside, right? You guys know it's like when the market goes down, we create drawn liquidity to the upside. If the market goes up, we create drawn liquidity to the downside, right? As the market was going down, we created these levels of liquidity here to the upside. So ideally, if the market does not want to go any lower, as we already swept all the lows down here, the market will ideally want to form an MSS model and start going up, right? So what are we going to do in this case, right? In here, let me catch up with the chat. Do you always trade do you always trade your lines on the 15-minute time frame? No, I usually find them on the 30-minute to 1 hour time frame. Remember, the higher the time frame, the stronger the level is, right? So if you can find a level on the 4-hour time frame, on the 1 hour time frame, on the 30-minute time frame, it'll be beautiful, right? But all right, so in this case, right, what are we looking for? Well, we're going to be looking for a simple MSS model. How would that look like, right? And in the meantime, let me go ahead and put my chat right here so I can catch up with everyone, right? So what are we looking for right here? Well, we're going to start looking for buyers to start stepping in And after buyers start stepping in, that'll be our cue that the trend is trying to flip from bearish to bullish. Keep in mind, we're already bullish. Remember space. Remember how I told you, or pretty much how you asked the question, how did you know to be bullish when the market was bearish? The only reason we know this is because the market is not interested in going any lower. Main reason being, we already swept drawn liquidity. So in this case, what we're going to do is we're going to give the market some time to actually start pushing up. You guys can see right here, right? We swept every single low, and now buyers are stepping in pretty strong, right? Giving us the chance, or giving us a signal that the market wants to start pushing up. But what's the one thing that is holding us down? Well, it's going to be this bearish 5-minute fair value gap that we had marked out from earlier, right? Let me catch up with the chat. And you only mark out, you are only marking out lows and highs, not market opens. No, guys, realistically, market opens and market closes don't really do anything, in my opinion. I think they're kind of useless. Bro, what's a fair value gap? It's all on my YouTube, bro. It's all on my YouTube. I'm not gonna explain it in this class because it's way too long and it's way, it's just a whole different topic. Let me see. But yeah, Katie, in my opinion, I don't really think market opens and closes are really useful. They don't really show you anything. Because usually they get filled overnight regardless, right? So what I mark out is it doesn't have to be a market open or market close. It just has to be a level where the market has currently bounced from. So we go from there, right? So yeah, market opens and market closes, they're not in my best interest. I just mark out pretty much the market lows and highs that pretty much are created everywhere, right? And yeah, I mean, people have this strategy with market opens and closes. I don't really care about them. I don't really trade it. I'm not saying it doesn't work. I just don't trade it, right? I see a lot more success trading these highs and lows, right? Because of course you have more levels to really work around. Didn't another fair value gap open? Yeah, Jesse, yeah, you're actually right, right? But the thing is with this one, the reason I haven't really mentioned it, and good on that, right? The reason I never mentioned it is because the market never retraced into it. Sure, if you would have retraced into it like this, right? Then yeah, I would have traded it just like that and then up. Right, I would have traded this 100%, right? But the reason I'm not mentioning it is because I know that the market didn't really retrace into it, right? But here, let me keep catching up with the chat. So let me see. I'm new here. Are the classes every day? Not really. I do them pretty often, like every 2 days, I would say. But yeah, welcome, by the way, welcome. You were able to see the downside and the bounce to the upside. Yeah, that's pretty much how I was able to read the market. I told everyone, I'm like, guys, even though the market is selling off, it's not something I'm interested in because I do believe the market can form an MSS model after we sweep every single low that the market created, which is these 3 levels, right? So yeah, let me see. When liquidity is taken, you basically expect an MSS. Exactly. So once again, for those that don't know what an MSS model is, let me explain it to you once again, right? So an MSS stands for market structure shift. So MSS stands for market structure shift, right? What is a market structure shift? Pretty much, let me explain it right here. Okay, so here's an example, right? An MSS is simply when the trend flips, right? So for those who don't know what an MSS model is, in simple terms, is when the market goes from bearish to bullish or from bullish to bearish. In this case, what we're doing is we're going from bearish to bullish, right? So this is an MSS model, but it doesn't happen out of thin air, right? An MSS model is more than likely to form after the market takes out liquidity, right? Because you guys know liquidity is like a magnet in the market. Once all those orders that are waiting to get filled, once they get filled, right, the market wants to go ahead and fill once to the upside or to the downside depending on what the trend is, right? But doesn't market shifts if it passes to the lower high and lower low or higher low? It really depends. It depends on what levels of liquidity you have nearby. Let me see. Is an MSS the same as a break-in structure? No, it is not. It's similar, but it's not, right? Pretty much what an MSS is not a strategy where you can really trade it. You don't really get a you don't really get like an entry point. You pretty much get like a bias in the market, right? So your bias flips from being bearish to being bullish as a confirmation, right? How can you tell when orders are filled? Like I explained, right? So once again, in this example, right, what we're looking at right here is, right, let's say we have drawn liquidity, right? We have drawn liquidity right here, and right here. Let's say that you guys entered at the high up here. So your stop loss would be placed right here, right? So for those that don't know how stop losses work, pretty much what a stop loss is when you place a stop loss in the market, you're pretty much telling the market if this stock price or this future price or whatever, if it goes below this price, I want you to go ahead and sell my order to someone else. You guys know that the market runs off buyers and sellers. People need to be constantly buying and selling for price to constantly keep moving, right? So what ends up happening is when you set your stop loss at a very common low like this, for example, you're not going to be the only one placing the stop loss. There's actually going to be millions and millions of orders placed at the stop loss, right? So what ends up happening is the market is very interested in taking out these levels. So what it's going to do is, once again, it's going to take out this level of liquidity. It's going to fill all these orders because, once again, you're telling the market, if the market goes below this certain price, I want you to sell my contract to someone else. Once it gets filled, right, it's going to start going back up, usually, just like that, right? So that is pretty much what drawn liquidity or and MSS, pretty much how they play out, right? So that is the example. Now, let's say right here, let me delete all of this. Now, by looking at this current chart, what do we have so far? Let me kind of catch up with the confirmations, right? So right here, right, I'm going to type confirmations. We know that currently the market trend is, we know the trend in the market, right? We know that the current trend is bearish, right? After we know that the trend is bearish, we want to start looking for drawn liquidity, right? The drawn liquidity is to the downside. What just happened? Well, we just went ahead and took out the draw liquidity, right? After we take out the DOL, what we want to start doing is start looking for a possible MSS to start forming. In this case, since the market trend was bearish, right, we want to start looking for a bullish MSS structure, right? How does that look like? Like this, right? We go from selling to buying, right? Now that we're going from selling to buying, you guys are going to start looking for your setup or your entry point. How do we know what the setup or entry point is? Well, we can base it off of fair value gaps or inverse fair value gaps, just like that, right? So what do I mean by fair value gap or inverse fair value gap? Well, there's actually two forms of entries in every single level or every single setup, right? You can either base it off a regular fair value gap, which in this case would look like this, right? This fair value gap, just like how Jesse mentioned, and it will look like this, right? So you just look for a simple retracement down into the fair value gap. After you get the retracement, you just expect drawn liquidity to get taken out, right? This is known as a regular fair value gap. So how does an inverse fair value gap pretty much look like? Well, an inverse fair value gap, what it looks like would be like this, right? We have a bearish fair value gap, but since the trend is currently bullish, we're not expecting for sellers to step in right here. We're expecting buyers to be a lot stronger and inverse right through it, which in this case would look like this. I'm gonna go ahead and pull up the screenshot. 1 second. In this case, it would look like this, right? So if you guys look at my chat, you guys can see we went right through this fair value gap. We ended up inversing it, and that's when you guys would ideally go ahead and enter your long position, right? So let me go ahead and catch up with the chat in the meantime. A market retracement represents what? Does it represent a bounce? Yeah, so pretty much a retracement is like kind of like a pullback for the market to catch up, and then it keeps going that direction, right? Yeah, so back to the level. So it could be a retracement into the fair value gap, it could be a retracement into drawn liquidity, or it could be a retracement into any level that you have in the market, right? The market, it pretty much has pullbacks literally every candle, right? So that's what it's known as. Thanks, David. I'm learning a lot from this. Sounds good, Space. That's what I like to hear, right? So what we're doing in this case, what we're looking for, like I said, you can either base it off a regular fair value gap, which would be like this arrow right here, for example, or you can simply base it off a fair value gap an inverse fair value gap that looks like this, right? So in this case, we never got the regular fair value gap. So our final confirmation, which would be the cherry on top, would be the inverse fair value gap. So how do you trade this? Well, right here, you guys can see that eventually we ended up finally breaking above this candle right here, right? So this candle, when the market breaks above this inverse fair value gap, would be your entry point, right? So how would you enter? Well, you just simply wait for the candle close above, and you guys can, in this case, I'm not gonna lie, for this setup, the stop loss was a little bit messy, since there was no nearby lows. So I just put my stop loss at the midpoint, and I just went off that, right? So you would enter based off the break above the fair value gap, since the market trend is currently bullish, and you guys would, of course, place your drawn liquidity at these two highs. Of course, it'll be PT1 right here. So I'm gonna write drawn liquidity plus PT1 just like that. And we have drawn liquidity plus PT2 right here. Just like that. So now that we have two price targets and we're in our long position, all we need to do is pretty much, let me see. I use the Nephew Sam indicator on TradingView to get important spottings for fair value gaps. It's a great material, very informative. In my opinion, I don't really think, in my case, because I've been trading fair value gaps for a while, I don't really think that, I don't think that fair value gap indicators are that useful. Fair value gaps are not hard to find. They're actually Really easy to find, right? A 5-year can do it, right? Why not place the fair value gap below the inverse fair value gap? Main reason I didn't. Okay. So Ben, I usually do that in like 99% of my trades. The one reason I didn't do it this time is because the market, the stop loss, I wasn't gonna be risking nearly 50 points. You know what I mean? That's way too much, right? So I'm like, you know what? I'll just place it at the midpoint, which is more of more of a like a random level. But if the market dumps that much, it'll be part of the queue that is not gonna play out. So yeah, bro, call me. No, bro, not you, bro. Like I'm saying that even a 5-year can explain it. Is our risk reward 1 to 2 or 2 to 1? It'll be, in this case, it'll be 1 to 5, almost 1 to 6, right? So we're risking to lose, let's say for example, $100 to make nearly $600, which is a beautiful risk reward. How do you gain confidence and a strong mentality to in a losing streak and for discipline? Good question, right? So I actually get this question asked a lot. Like, how do you go about taking red trades? Because you guys might know that it is actually mentally exhausting. It's super draining, right? And especially for someone who runs a Discord and has a lot of people, like being mentored by him, it could be pretty stressful when you guys take a losing trade. So how do I go about them, right? So I have this method where I just do stuff that I don't like doing. What does that mean? Well, you guys know with discipline, most of everyone's discipline is built at the gym. Of course, some people don't go to the gym, some people go to the gym, right? Some people don't like it, some people love it, right? So the way I go about my rules, the way I go about building discipline and respecting my rules in trading, because you guys know trading, mistakes happen all the time. It's how you learn, right? In my case, the way I go all about it is whenever I take a losing trade and I know that I broke my rules, like I told myself, oh, I don't want to trade it, but I still traded it. What I'm going to do is I'm going to do something that I don't like doing, right? What that ends up building is discipline. Why? Because let's say, for example, right, you took a losing trade and of course you broke your rules. For me, I like to go to the gym, but I don't like doing cardio. I actually hate it, right? So what I'm going to do is I'm going to do a shit ton of cardio for, like pretty much like a punishment for me breaking my rule, right? Once I do that, the next time I'm debating on, breaking my rules or whatever, I'm going to think to myself, do I really want to pretty much torture myself with cardio, or is it just simple for me to sit back and just not break my rule, right? What that ends up doing is it builds a very good habit, in staying consistent, and it David Goggin, yeah. So pretty much just like that, right? You're building a good habit, and you're also building discipline that you need in the market. And yes, guys, I promise you guys, going to the gym or doing whatever it takes to build discipline it will literally change your entire life in the trading, in the trading space, right? Because you guys know trading, you're getting paid not by time or not by a salary. You're getting paid based off your decisions, right? If you can't make good decisions, then you know what I mean, you're gonna end up losing money. So of course you need good discipline to make good choices, right? Trading, of course, it's mentality and mindset. If you guys don't have a good mindset, if you guys are too emotional, you're not gonna make it far in David dropped the workout routine, bro. I gotta keep that a secret, bro. Nah, but real stuff, guys. Trading, if you guys don't have a good mindset, if you guys are always putting yourself down, like, oh, I suck at trading, like, okay, the way you could word it is, if you close your eyes and I tell you to look for something brown in the room, you're gonna be looking for only brown, right? So if you pretty much trade and you're pretty much telling yourself, I'm only going red, I suck at trading, you're going to be looking at reasons why you suck at trading, which is going to bring your mindset down and your confidence down, right? If your confidence is down, you're going to be hesitating on entering trades, and little do you know, these trades are going to end up going your way, right? What does that create? It creates FOMO. If you guys have FOMO, or it also stands for fear of missing out, if the trade is going your way, you're going to chase it too late, and it's going to go against you, making you lose the trade. Right? So guys, it's a whole different class that I have to do on mindset, but trust me, you guys, if you guys are too emotional, you guys have a shitty mindset, or you guys are not confident, you won't make it far in trading. And I'm just being real with you guys. You guys need to be confident. Even though, let's say for example, you're on a huge losing streak, you have to be positive. You guys know, for those that watch my live streams, always, when I'm live trading, regardless if I'm red, regardless if I'm green, I always have a positive mindset, right? That's why, so many people like the live trades, right? My analyzing is good, but my problem is entries. I suck at entries in Forex. Okay, it doesn't really matter the market, but it's all backtesting, right? Whenever you're red in a trade, or whenever the trade goes against you, even with my winning trades, you guys see anytime that I win a trade, I will always do a class a few hours after. Why? Because there's always room for improvement. I've been trading for 4 years. You guys call me consistent, but what don't I change? I still do, what's it called? I still review my trades, winning or losing trades. I don't care, right? There's always room for improvement, and that builds consistency. Exactly, right? How do we view your live trades? Okay, so you can either join you can subscribe to my YouTube, and everything is in the link in the description. And you can go from there, right? So it'll be right here, right? You could join the community, or you could just watch them through YouTube. It's all up to you, right? You either win or you learn. Exactly, guys. The saying is, there's a few L's in millionaire, right? If you guys want to become a millionaire, it's not gonna be all sunshines and rainbows. It's actually gonna have a lot of rainy days. That's how it is, right? But through these rainy days, you learn from them, right? There's an L in lesson. There's a few L's in millionaire, guys. There is, and there's also, before you earn, you gotta learn. You know what I mean? That's the saying, right? You gotta put that L in front of earn, because you guys need to take L's to learn from your mistake, and then you go on from there, right? So that's pretty much what it is, right? But yeah, anyways, guys, long story short, after you guys found your entry right here and you place your stop loss, you just let the trade do its thing, right? You micromanage on the way up, and you guys can see exactly how this trade ended up playing out shortly after, right? We hit both price targets, resulting in a beautiful 200-point trade, right? And that's exactly how I managed to catch this entire move for 200. This is, like I said, guys, this has been my biggest win to this day, right? Usually I catch 100-point trades, 150-point trades max. No, this one went for 200 points, which has never happened, right? So I'm really excited. I'm really happy with all the stuff that we had today. Literally everyone won. I've been getting a ton of DMs telling me like, yo, this has been amazing. You guys can see all the wins here from today. Amazing. Like, we could not have done it better. We read the market perfectly. We got the best possible entry. And the trade ended up going 200 points, right? So yeah. Now, I'm seeing that a lot of you guys are still in here. If you guys do want to ask some questions, maybe you guys are confused with something, feel free to ask ahead. When do you start putting your stop loss into profit? Whenever you take your first trim, always move your stop loss to break even, right? So like this, for example, right? So if we entered right here, right, and the trade went green just like this, you could go ahead and take some profit here. There's nothing wrong with taking profit, even though your PT hasn't been hit, right? You're just you're pretty much trimming on the way up, right? You're micromanaging, and what's it called? Pretty much, just like, yeah, like trimming on the way up, right? So in this case, let's go ahead and say that you trimmed some contracts off right here, right? Meaning that you guys didn't sell all your contracts, you just sold some to have that guaranteed profit if the trade goes against you, which it could, right? So what you could do here is you can move your stop loss from red to break even, meaning if you took some profit up here and the trade goes against you, what can end up happening is, sure, your unrealized gains might go to zero since you sold that break even, but your realized gains, which is the profits that you went ahead and took up here, they're still going to be on your account, meaning that you're still somewhat going to be green on the trade, right? So as the trade goes up, let's say your PT1 got hit, you can go ahead and move your stop loss to your first trimming point, just like this, right? If your second PT gets hit, for example, right, what you could do is you can move your stop loss from PT1, or from your trimming point, to PT1, just like this, meaning the trade is not always going to go your way, right? It's not going to go your way forever, right? So when the trade does go against you, you will sell for a guaranteed profit. There is no way for you to go red if your stop loss is green, which is why I always tell you in my alert channel, I'm like, guys, please, not please, but I tell you guys, make sure you guys are trimming and moving your stop loss on the way up. You guys can see right here, PT1 hit for 120 points. Trim most off here, meaning I sold most of my contracts for a profit, and I went ahead and moved my stop loss to green, meaning I'm trading my stop loss as the stock goes up, right? And that can go for stocks, crypto, futures, whatever you guys are trading, right? So that's pretty much how I go about it. So any TP that gets hit or any trimming point that I have, I go ahead and just simply take some profit and move my stop loss, right? Let me see. Bro dropping wisdom. Okay, David, if you know it's gonna sweep liquidity, why not write it down towards liquidity? Because it's not that simple. Trust me, it's not that simple. You don't have a game plan behind it. If the trade does go against you, you don't know where to get stopped out. You probably won't get the best entry, and so on, right? So there's a lot more to it. You just don't have a game plan behind the liquidity sweep, right? So just play the after reaction. In my case, that's what I would do. Okay, so I've been trading consistently for a couple months now. I'm only on Robinhood at the moment, but I want to go ahead and try a different platform, like the one you're using. Any suggestion? I'm located in the US. Louis, I'm pretty sure that's your name. Yes, I would. Okay, if you're gonna do options, I would say definitely move out of Robinhood. Robinhood is actually a piece of shit. right? I'm gonna be real with you guys. It sucks. It has horrible fills and it's extremely slow. Sure, it might be simple for beginner traders, like it's so easy to use, whatever. No, if you guys want an actual really good broker with the best fills, best everything, for options, do Webull, right? It's pronounced like this, like for options, Webull. If you're gonna do futures, right? For futures, I would suggest doing Tradevate, right? That is my go-to broker. That is the one that I use on a day-to-day basis for about 2 years now, right? So here, I'm gonna go ahead and drop the prop firm link. If you guys do want a prop firm, maybe you don't have enough money to trade futures, you can always buy an account for like 30 bucks, right? So here, let me go ahead and put it right here. So there it is. I'm gonna go ahead and send the link right there. Right, so yeah, Webull is the go-to broker. If you guys are using Robinhood, I hate to break it to you guys, but Robinhood is actually shit. Right, if you guys want to make fast money, like if you guys are going to be trading SPY or QQQ or whatever, I don't think Robinhood is the go-to broker. It actually sucks. Let me see. Do you have a strategy for stocks? The same strategy I always teach on my YouTube, which I'll link right here, is the same strategy I use for everything. Could be stocks, could be crypto, could be futures, could be forex, could be commodities, whatever. Do you ever use the two candle confirmation? No, I don't. Let me catch up with the chat here. Hold up. Let me see. Do I only trade NQ? Yes, I do. I trade ES sometimes, but it's not my favorite. I really don't like the way it moves. So do you mainly find fair value gaps on the 5 or 15 or 5-minute time frame? Katie, in my opinion, I think the 5-minute fair value gaps are like they're worth gold, right? For those that are always in my live trades, for those that are always following my alerts, you guys know that 99% of my fair value gaps or 99% of my setups are found on the 5-minute time frame. I love the 5-minute time frame. Let me see. What brokers are available in Europe? Okay, if you want to do options and I think futures, you could do IBKR. That is the European broker. It's a good one as well. Do I place trades on the 5 or 15-minute time frame? I do the 5-minute time frame. That is my go-to time frame. Do you know if there's any bullish or bearish value gap? How do you know if it's definitely gonna go bullish or bearish after it's been hit? Like, what is the confirmation? Okay, here. So let me explain to you guys right here, and it's actually super easy, right? You just mix drawn liquidity and MSS model, right? So let's say, for example, right? Let me give you guys the perfect example right here, right? Let me see because I have a lot of drawings here. Okay, so. And this is actually going to be useful for a lot of you guys, right? So I really want you guys to at least pay attention to this one, right? So let's go ahead and say that the market trend is currently bearish, right? So it's going to look like this, for example, a bearish market trend, and the highest point that we went to during this bearish market trend is going to be this. Let me give you guys a better example. Let's say the market trend is bullish, right? And we have drawn liquidity set up here, right? Meaning that this candle right here is the highest candle that we've ever gone to nearby, right? So what we're going to do is this is going to be known as DOL, drawn liquidity, right? So you guys know drawn liquidity acts as a magnet in the market, right? So what you're going to do here is you're pretty much going to use the magnet concept, right? We know that price is going to move into this drawn liquidity eventually, right? Depending on how the trend looks, right? Now, we know that the current market trend is bullish. How do we know it's bullish? Because the market is constantly going up, right? And we know that the market is going to keep going up because first of all, the market trend is bullish and we have not taken out drawn liquidity to the point where the market has no reason to go back down, right? So the market has, of course, some room to go higher into this level of liquidity, right? Now, as we're going up into this level of liquidity, we created a bullish fair value gap. So how do we know if we're going to go ahead and inverse this, or how do we know if we're going to go ahead and use this as a continuation candle to go into this level of liquidity? Well, in simple terms, right? We have the fair value gap marked out just like this. Right, just like that. We have the fair value gap, and of course we have the midpoint, which will look like this, the dotted line. Right, so we have a midpoint and we have the fair value gap. Right, the reason we know that this fair value gap is going to keep going up is because the market does not have any reason to go down. Why doesn't it have a reason to go down? Main reason being is because we have not taken out drawn liquidity above. Right, so what we're going to be doing is we're going to wait for the candle to retrace back into this bullish fair value gap. Once you get, of course, the retracement into the midpoint, we wait for a buying candle. Once you get this buying candle, that would be our cue to go ahead and enter the longs. You enter longs, you hit drawn liquidity, and the trade is done. Now, here I can go ahead and give you the screenshot just in case. Regular fair value gap continuation, just like that. Right, so this is how it would look like. Right, let me go ahead and make this a little bit larger. Okay, so here I'm gonna go ahead and send you the picture for the regular fair value gap. Right now, how do we know if a bullish fair value gap is going to be a bearish one? Well, Let me give you another example, right? So let's say, for example, right, we have the same exact fair value gap, but in this case, instead of us retracing into it before we take out liquidity, the market actually ended up going a lot higher, taking out liquidity without retracing into this bullish fair value gap. Meaning, if the market took out liquidity up here, it's not interested in going any higher. Why? Because other orders already got filled, right? So if the other orders got filled in this case, what do we want to do here? Well, we want to look for an MSS model, right? So we want to start looking, since the liquidity already got swept, we want to start looking for sellers to start stepping in, as there is no more reason for the market to go any higher, right? So what we're going to do in this case is we're going to keep looking for sellers to come in. Now that we know that sellers are stepping in and we formed somewhat of a market structure shift, we're going to be using this bullish fair value gap as an inverse, right? So we're not going to be looking for a bounce off of this fair value gap. Our model is telling us to look for an inverse, like this, right? Once we get the candle close below this bullish fair value gap, that will be your cue to go ahead and enter shorts, right? Because the market is bearish. We swept liquidity, and now what are we going to target? Well, as simple, the same way we marked out the drawn liquidity up here, you would mark out the drawn liquidity down here, for example, right? So it will look like this. You will have drawn liquidity, as this candle low was the lowest point that the market has ever gone to, right? So the way this trade will look like will be like this. You will enter shorts off the break below the fair value gap. You set your stop loss at the most recent high, which would be up here, and you set your price target right here, right? And that's how I would use an inverse fair value gap model. Now let me know if that made sense. And here, let me go ahead and send you the screenshot for this trade, or for this example. My bad. So this will be a inverse fair value gap model, right? So it would look like that. So once again, drawn liquidity got taken out. We never retraced into this fair value gap. We ended up inversing it since we already took out drawn liquidity. And what you're going to do is you're going to go ahead and target this low down here, right? And then the trade will be one and done, which is pretty much what we did today, just to the upside, right? So yeah, this is how I would do it, just like that, right? And I went ahead and sent the screenshot there if you guys, of course, want it. Let me see. TJRRJT. I took this trade during the last hour, ended up working up. Can a fair value gap be between two candles? I think you had that fair value gap, unless you marked it out on a different time zone or a different time frame. I don't think that was a valid fair value. I mean, it worked, right? So, but I wouldn't trade it like that, right? So make sure it has three candles. Fair value gaps consist of three candles, right? The first candle is where you mark it out. The third candle is where you mark out the finishing thing, and then the second candle would be the gap in general, right? If you have two candles, there can be a middle to mark out the gap, right? There has to be three candles. So keep that in mind. Let me catch up with the thing. Do you find your own fair value gaps? Guys, I do not use indicators. I don't like indicators. I don't think they help you. Whoever tells you that they have a buy and sell indicator and they're trying to sell it to you, it is bullshit. I'm here to tell you it does not work. It's a huge money grab, right? So no, I do not use indicators. I find everything by myself. I use price action, and that's it, right? So that's why you guys can see that my chart is super clean. Only nothing but lines, right? You guys do not need indicators. It's useless. And I'm here to tell you guys, because I used to use indicators like crazy. My chart used to be filled up with indicators so I could look smart, while I was in trading in class. But I'm here to tell you guys that it does not work. So yeah. Let me see. Okay, I've only traded options so far and surprisingly made some money consistently. But definitely looking to trade futures. Louis, if you can make money consistently of options, I'm here to tell you that you will become extremely profitable with futures. Here's why. Options has Greeks. Greeks has theta. You guys know theta is a pain in the ass. Options is pretty much built to make you lose money, right? Although you can make money, you can lose it twice as much, right? Due to theta. Meaning, if the contract does not do something in a set amount of time, even though the stock has not gone down, the option price will start going down because it's losing value. Theta is eating up that value. Futures does not have Greeks. If you buy it at a certain price and the market does not move based off that certain price, you will not lose money nor make money, right? So that is why if you guys are super profitable with options, you guys will be 10 times more profitable with futures. And that's why I do futures, right? I used to do options for 3 years. I switched over to futures. Is this a strategy that I always use? Yeah. And once again, it'll be here on my YouTube. If you guys want to learn my entire strategy, it'll be right here. So if you guys want, you feel free to subscribe and all that stuff. Who taught you this strat? Bro, it's all trial and error. Like I said, I think I said this last class. You guys know I started at 15 years old. I'm turning 19 soon. I never had money back then to really invest into a mentor or spend, like $500 on a course, because, I knew that options worked. I just needed to learn it the hard way. right? And pretty much this is why I do free classes for you guys every single day. The reason I do this is because when I first started, this is exactly what I wanted, to learn, right? So I was in your guys' shoes at one point. And that's why I do this free education. This is why I tell you guys my strategy for completely free, no strings attached. I'm not selling you guys anything. I don't really care. I just want you guys to have a good trading experience, and not be in my shoes when I first started, right? It took me years. It took me 2 years to actually become somewhat profitable, right? And as time went on, of course, I'm here today teaching you guys on both YouTube and a big ass Discord, right? So yeah, I did learn by myself, but that's why I'm here, today, or pretty much every day, giving you guys alerts, giving you guys videos, making, these classes, so you guys can not be on my shoes and actually have an enjoyable trading experience when you first start off. Hey David, on average, how many points do you set for your stop loss? Usually around 15 to 20 points max. I don't like anything less than 10 points because, in my opinion, I think that's way too tight, right? You guys know with NQ moves really fast. If you have a 10-point stop loss, you're probably going to get stopped out before the trade does what you expect it to happen. So in my case, usually my average stop loss ranges from 15 to 20 points. Let me catch up here with my YouTube chat. Thanks for looking out for us, bro. I got you guys. Hey David, it's Berg, and I just blew my account. Didn't follow my rules. It happens, bro. You just look at where you went wrong, see where you could have done better, and just keep practicing, bro. Trust me. Do not let one loss, do not let one blown account ruin your trading experience. I'm here to tell you guys, I've blown countless of accounts. I've blown countless of ports. I've lost a shit ton of money when I first started. I'm still here today, and I'm here to tell you guys that once you find the consistency, it will all come back very quick. You guys will make all that money back and so much more, right? So yeah, don't get discouraged by a little don't get discouraged by a little loss or a little blown account. Trust me, it's nothing. But again, really tight stop loss, right? So stop loss shouldn't be above the fair value gap. Yeah, don't have too much of a tight stop loss. Usually have about a 15 to 20 point stop loss. That is my average. I don't have anything more. I don't have anything less. So it was an inverse because the trend was bearish? No. Oh yeah, right here, it would be an inverse because the trend flipped from being bullish to being bearish. This is known as an MSS model, right? So that's exactly what it is. Kind of new to this fair value gap trading, late to the stream as well. Is there any sort of good confirmation to enter a trade, like behavior of the candle? Yeah, of course. I mean, if the candle is moving really fast, that'll be your signal to enter. But if you are struggling a little bit on that, here, I'm gonna go ahead and give you the video here. Right, I have a complete guide in my entire. The video's a little bit long; it's like an hour long. But it explains everything you need behind the strategy if you're new to it, and of course if you're interested in learning about it, right? So let me go ahead and find the video for you right here. Okay, let me go ahead and send you this video, just like that, right? What are fake outs? Fake outs is pretty much like this, right? Like you think the market's gonna go higher based off this level, and it dumps right after, right? God bless you, bro. I will check out your strategy. Thank you, man. And if anything, guys, yesterday a lot of you guys went ahead and added me. I responded to every single DM that I got instantly. So if you guys have any questions, you guys want to learn more, you guys want to learn from me, maybe a mentor or whatever, guys, hit me up on Discord. Feel free to add me at any time, DM me at any time. I usually respond pretty much instantly, right? So yeah, feel free to add me, guys. Feel free to add me. Let me see. Damn, bro, I'm 19. I'm trying to be like you, bro. Trust me, I'm not a guru. I'm not here to tell you I'm 19 with a Lambo. I'm really not, bro. I'm just a trader. You know what I mean? Like I'm here, just working every day, working hard as always. You guys see these classes every day. If you really want it, trust me, you'll get there, right? But I'm not here telling you that I'm a millionaire. I don't have a Lambo. No, I'm just a regular trader that I would say I know what I'm doing, right? Which is why I'm teaching you guys. But yeah, David started at 15. I was playing Fortnite at 15, bro. So was I, bro. So was I. But yeah, let me see. Do you use one contract? No, I use 15 micros, which is 1.5 mini. That is my go-to sizing. But yeah, can I get that video too? Yeah, it's right there. It's right there. I need more explanation about I don't know too much about that. That's for you to ask him. Here, let me catch up with this one because I just saw the ad. Bro, that fair value gap is not valid anymore, right? Because it's been filled by those red candles. Yeah. Okay. So actually, a lot of you guys reacted to that message. Yeah. So guys, when a fair value gap gets filled, right? For example, if it gets filled like this, it means that this fair value gap is no longer. And I'm seeing a lot of friend requests coming. This fair value gap is no longer valid. Why? Because all of the imbalances in this candle, which is the fair value gap, they already got filled, right? So there's nothing more to fill here, meaning that the fair value gap is no longer valid. It won't react anymore. It won't play out anymore. So once it gets filled, it could be a bullish or bearish value gap. If it gets filled like this, it will not be valid, right? So yeah. You guys are already in here improving. Other young people are just enjoying temporary enjoyment. I mean, there's nothing wrong with some enjoyment. You know what I mean? Like on the weekends, I go out, shit. But I mean, if you guys really want it bad enough, you guys gotta work hard every day. I wouldn't say I'm where I'm really comfortable yet. So yeah, for my card guys out there, I'm working with something. You know, definitely been working hard. I feel like I do deserve this. So yeah. I mean, it's in the works. It's in the works. What session do I trade? I only trade New York session. I don't like Asia. I don't like London. They just move way too slow. It's not something I trade. How do you make it micros? Can you do it on a funded? Yeah. If you're gonna trade micros, you could trade MNQ4 or MESU4, just like that. Just put the M in the front. Let me see. I go on the bro. There's nothing wrong with going out. I mean, just don't do it like to the point where you're blowing all your money on like whatever you're doing. But there's nothing wrong with having fun. Because I mean, if you keep working, you're gonna get burnt out. I get burnt out a lot actually. Okay. I've also only traded options and Google and Apple stocks. I mean, there's a whole world of options out there. I would say try doing futures. If you try out futures, I promise you'll come back to me and you'll thank me. Ever since I switched to futures, I've never looked back at options. Yeah. M2. So contracts, it could be NQU4, it could be ESU4, or it could be MESU4 or MNQU4. Right? That's what a contract is. Do you trade before the stock market opens? No, I trade 30 minutes after the market opens. Main reason being, okay, so first of all, you guys know, for those in my premium, you guys know that I never really trade at 9:30. Main reason being is because I usually wake up like 10 minutes before the market opens. My mind is not, my mind is all over the place. When I first wake up, I have to reply to messages, emails, and all that shit, like a business type of thing, right? So what I do is, you guys know when the market first opens during New York session, that candle is always that candle is always the most volatile candle. The opening candle is extremely, it's extremely volatile. So yeah, what's it called? So I usually like to wait 30 minutes after the market opens. Just you're giving the market 30 minutes to open up, to form a trend, and hopefully make some setups, right? So I believe that 30 minutes, which I start trading at 10 in the morning, is when I go live. By the way, anytime I live trade, it's always going to be at 10 in the morning, right? So yeah. Anytime I I go, I start trading, it will always be 30 minutes after the market opens, just so it gives us that trend, and that it's kind of like smooth sailing pretty much. So I don't trade the opening session. I trade after it. I might have messed up in the head, but burning. Yeah, bro. I go to parties sometimes here and there, bro. I don't like that shit. I don't like it. Let me see. You won't run the ones on Ford though. Bro, I won't view on you right now, literally on stream, bro, if you want me to. Basically, you have everything on YouTube for free. We just need good risk management to do good. God bless you. Thank you, bro. And I can teach you guys about. Okay, let me ask you guys. Would you guys want me to do a Would you guys want me to do a risk management class for my next class? I can teach you guys everything about my risk management, exactly how to become profitable, how to become consistent, and all that good stuff. Yes. Okay, so I'll do that on Monday. I'll do that class on Monday. Let me write it down. Hold up. Let me write it down. Hold up. So Monday, do class covering risk management. Okay, I wrote it down. So Monday, I want to see every single one of you guys in here, because it's gonna be a good class. I'll show you guys exactly how to manage your risk, become profitable, and of course stay consistent, because that is a big topic in the market. Now he about to cook me on stream. That's crazy, bro. I'll hop on right now if you're talking. I'll hop on right now, bro. I usually wake up late, or I'll be at work and I realize I could have made some money, bro. Like always, bro. If you guys want it bad enough, you guys will make time to wake up early and of course trade, right? Or it could be anything. It could be a business, could be trading, could be whatever you guys are doing, right? Bro, in what time frame should we see the market trend if we wait 30 minutes after the market opens? I use the 5-minute time frame. It's pretty easy to know what the current trend is. I can show you right now, actually. Right. So today, for example, let me go ahead and see right here. Right. So if we use today's price action, for example, we know that right off open, you guys can see that the market in the first 30 minutes of market open, it looks pretty bearish. I mean, the market is selling off, right? So it's safe to say that the market wants to keep going lower, right? So yeah, do you have a video on Apex accounts, rules, and ways to pass them? Yes, I do. Here, let me go ahead and send it to you right now. Here it is. There it is. Okay, I went ahead and sent it. Um, Here, let me catch up with everything. What's your YouTube? Here it is. Here it is. You guys can subscribe. I do my live trading on there at 10 in the morning. Pretty much not every day, but most times. So of course, if you guys want to join my community, subscribe to my YouTube, watch my lives, watch my classes. It's on the description and of course in my YouTube. So it's all there. Just sub. Thank you, man. Thank you for the support. It means a lot to me. Let me see. Uh, I'm so into the stream. I almost forgot I have to go pick up my bro. Bro, don't you know how they get, bro. You know how they get. So, what books do you read for trading? I'm here to tell you guys that I don't read books. I've never been one of those people that, I do homework, books. No, I just trade. In my opinion, reading could only do so much. Reading can more so help you with psychology, mentality, discipline. But trading, I mean, not trading. Reading won't make you a better trader. It'll just make you have a better mindset, right? Trading will tell you, oh, go long off this. You know what I mean? Like, you guys need actual screen time. So if you guys want to get better at trading, you need to be on the charts for about 4 hours a day. I've been on the charts every single day for 4 years for 8 hours a day. And for my OGs that are in my stream on YouTube, you guys know that it's been like this for 4 years, right? Every single day, 8 hours a day on the charts, practicing and practicing and practicing. It's how I master my craft. But in my opinion, I've never read a trading book. I probably never will, as I don't think I really need it. But of course, if you guys do want to, of course, learn YouTube, or not learn YouTube, learn your mentality and all that stuff, you can always do books. There's nothing wrong with that. Where am I from? I'm Italian, but I live in Miami. Thank you for everything. I'll for sure be watching you every day and very often. I can't thank you enough, and so thank you. XD, it means the world to me, for real. It really means the world to me. I'm seeing you guys win, seeing you guys learn, of course, seeing you guys make money with me off the alerts or off the teachings. That's pretty much my job, right? So yeah, it really means the world to me. Trading in the Zone is a good book. I mean, I've heard about Trading in the Zone. Yeah, if you guys want to read, that's definitely one of them that you guys should be reading. I can't really tell you that, it's good because, hey, David, if you don't mind me asking, what are your rules? Good question. Good question. So, if the market does not have a trend, I will not hesitate to close the charts. If the market is not going up nor going down and it's just trading like a barcode, I will not hesitate to close the charts and not, because if you guys are on the charts for 7 hours a day, you guys will get bored, right? It's like watching paint dry. You're going to get bored. You want to get the dopamine of, of course, taking a trade or whatever. And you're going to, of course, get chopped up and go red. So that is one of my main rules on the thing, right? Another rule is, it's more of like risk management rules that I have, which I'll cover in Monday's class. But the main one is, if the market is chopping, do not trade it. It's that simple, right? But yeah, let me see. For real, thank you. But yeah, if you guys have any questions, feel free to keep asking. But if not, we can always call it. How long have we been in the class for? Damn, alright, already 1 hour. What kind of car am I gonna get, bro? I'm trying to keep it a surprise, bro. I mean, most people know it. I'm trying to get a M340i. I'm gonna tune it. I'm gonna try to push 600. Right now I have one, but it's nothing crazy, right? How can you let's see. How can you tell if the market is volatile or stable or low volume? Okay, it's actually really easy. So if the market looks like this, for example, if the market is really volatile, the candles are pretty big, the candles are pretty good in size, like this, for example, like a 70-point candle, that means that the market is volatile. Now, if the market looks like this, right, don't trade this. Why? Because there is nothing going on here, right? But yeah, here is the difference. So I'm gonna give you one screenshot like this. So it will be this one. This one is volatile. This one is not volatile, right? Because the candles are the candle. There's no trend. There's no no big candles. There's nothing going on, right? But let me see. Do you use pre-market and after-market highs and lows? No, I don't. I kind of do. I use Asia highs and lows, London highs and lows, and of course New York highs and lows to find my levels of liquidity, right? So yeah, I practically do. Downpipe, intake, and a E40 tune, bro. You pretty much read my mind, bro. I'm definitely gonna get a downpipe. I'm gonna tune it for sure. I don't know about E40, but definitely a downpipe and a tune. Yeah, I mean that's pretty much all it needs, to be real. I'm gonna get a used one because it's on bags, and I'm not trying to go through the deal of getting the labor to get bags. So I'm just gonna get one that already has it. Let me see. I'm gonna get a 540i comp soon, bro. That's actually insane, bro. That is insane. How do you look for different session charts? Please show me. Okay, so it's all in one chart, right? So you guys know, um, it all consists of one chart. So here, let me give you the time zone. So Asia, and this is all Eastern time. So sessions, EST, right? So Asia, it opens at 6 p.m. EST. I'm not gonna put EST. 6 p.m. till 3 a.m. London is 3 a.m. till 9:30. New York, I can't type, bro. New York is from 9:30 till 4 p.m. 4 p.m. There it is. So these are the sessions. So when you guys are looking for what's it called? When you guys are looking for a session, you would pretty much mark it out like this. So if you guys look at the time down here, right, you see how it says 2 in the morning, right? Currently we're trading during Asia. When it goes to 3 in the morning, this is London session, right? You see how there's like a little gap up right here? This is London opening up, right? After London at 9:30, you guys see the volume switch, right? New York opens up, and this is the New York session, right? So here, let me go ahead and give it to you right like this, and you can find this all on ES or NQ. It's the same thing. Vlog when you get the whipski, bro. I actually might. I'm not gonna lie, I might get it next week because I'm not gonna try to sell my car, right? I'm not gonna sell my car to then figure out that the other car has been sold. I'm just gonna buy it and try to sell it in the meantime. I don't really need the money, so you know, I'm definitely gonna take it off the guy's hands though. I'm really gonna get it. Here it is. Let me send you the screenshot. Okay. Bro, what was your first big withdrawal? My biggest, or not my biggest one, my first big one, I remember doing it in school. It was a $1,000 withdrawal. Back then, 1,000 was a lot. So it still is. I mean, it's a blessing. But my biggest one, or my biggest day, I would say, I'm not gonna lie, I kind of gambled CPI, and I ended up making 4K in like 5 minutes. Um, I ended up making about 4K in 5 minutes, and that's been my biggest day, I believe, to this day. 4K in about 5 minutes. I've had definitely close days. Um, but what's it called? My biggest one by far has been, it was like 4.2K. Let me see. Would you say going from Forex to futures is good? Bro, it's the best thing you could do. Forex is by far at the bottom list of the best markets out there. It's by far the worst market. I hate Forex, right? But yeah, Forex, in my opinion, is not a good market to trade. It's super shady. None of the brokers are legit. They're all unregulated. It's just a huge headache, bro. Trading Forex is not the thing to do. Do you draw your levels of liquidity or your liquidity line only on the 5-minute time frame or longer time? For me, I find my levels of liquidity on the 30-minute, 1 hour, and 4 hour time frame. Anything less, I don't really think is that good. Because pretty much if you go on the higher time frame, you're pretty much filtering out all these little candles that you really don't need. Like look at this. This is the 5-minute time frame. If you go over to the 1 hour time frame, it looks a lot cleaner. You could definitely find stronger levels out there, right? But yeah. Is silver a good future to trade? I've never heard of anyone trading silver. It's usually gold. So I can't really tell you. I think it is. I don't know though. So don't quote me on that. I don't really need the money, bro. Flexed. Bro, not like that either. It's just like, I don't really know how to word it. But yeah, let me see. New York starts at 8 in the morning. No, it starts at 9:30. The New York stock market opens at 9:30 sharp. Those are the market times, not sessions. I'm pretty sure these are the sessions. Market times, market sessions, the same thing. I could be wrong, but that's what I've always based off of. You guys know you can only place orders from 9:30. What do you mean? Asia sessions, or I can't say it. Asia session opens up at 6 p.m. till 3 a.m. Bro, how much do you recommend for me to start? New York session opens up at 8 in the morning. I don't think I've ever heard of that. I mean, you can start placing orders at 9:30, but I don't know. I could be wrong. Bro, how much do you recommend for me to start in the future like you? Okay, if you don't have that much money, if you have like less than $100, less than 200 to 300, I would say, do a prop firm which costs like $30. Here, I can give you the link here. Let me see. There it is. You could do a prop firm, but if you have about 500 minimum, it has to be 500 minimum. to 1,000, I would say start doing a live account. I think 1,000 is the perfect amount to start with. Of course, 1,000 might scare some of you guys. So if you guys don't have that much money to pretty much risk in the market, I would say do a funded account. You can get one. You can get like a 25k account, 50k account for like 30 bucks, right? Which is what me and many other people do as well. I have both a funded account and a live account. I trade on both. What are your top tickers? I only trade NQ, my number one thing, and if anything, my backup is ES, right? So it's only NQ and ES. How does the withdrawal work on a live account? Same way how it works on any other broker. You make the money. You have to wait for the money to settle. Once the money settles, you can go ahead and withdraw whatever you have in the account, and it's your money, right? Yeah, 100k. Go ahead and send to me in DMs. I can go ahead and review your trade. Have you ever heard of looking at gold or crude or oil futures? I've actually heard of a lot. I know a lot of people in my community that trade oil. And I have a ton of people that trade gold as well, right? So yeah, I've actually heard of both. I personally just don't trade it. I like to trade NQ and ES. But yeah, let me see. We've been in this, guys. It's been 75 minutes, and it does not feel like it's been 75 minutes. What is futures basically? It's pretty much, I don't know how to explain it. It's just like a whole different market. Can we call it, bro? I'm sorry, bro. Go ahead, bro. Like I'm done reviewing. Guys, I'm gonna go ahead and call it a let me see. Why would you trade NQ over SPX? Bro, SPX is such. Do not trade SPX, please. If you guys are gonna trade options, at least do SPY. Do not do SPX. That's the last thing you guys want to be doing. That thing is. Oh, I remember doing SPX. I don't. It's literally flashbacks. You said SPX and I got flashbacks. Don't do SPX. Do SPY. If you're gonna do options for SPY or whatever, do SPY. Bro has PTS. Yeah. I got kind of cooked with meme stocks, and I only have about $500 left. Trying to grow my portfolio with low risk. Any advice? Good. Okay. My advice to you and my advice to everyone else is, if you have $500, do not expect $1,000 a day. Do not expect even $200 a day. Right? There's a thing called compounding gains or compound. I can't say it. Right? What that means is you're pretty much adding money as time goes on. Sure, you might be making $20 a day with $500. You could be making $40 a day, which may not seem like much, right? But if you guys really think about it, you're making $20 a day. Meaning, let's say for example, you have $100 and you're making $20 a day. You're gonna turn that $100 into $200 by the next week. That means you have $200 to trade with, right? You keep going, you keep going. You stack up the small wins. As the wins, sure they might be small. They might be $10, $20, $50, $100, right? They add onto your account. Eventually, you're gonna hit $1,000. Once you hit 1,000, you can start looking at $100 days, right? You hit 10k, you start looking at $1,000 days. You know what I mean? Don't full port a single trade just because you lost all your money in a meme stock, which I'm assuming it was GameStop. I know you probably heard about the GameStop thing with him coming back or whatever. A lot of people lost money, so yeah. If you have 500, I would just say just add up the wins. Sure, they might be small. It was Oh, okay, got it. If you have 500, which is still a really good amount, you could definitely make a good amount off that. Just take small wins, add them up, it will pay off eventually, right? It's not a race. It's just a rally, right? Is that the same? It's a rally, not a race. Yeah, that's pretty much what it is, right? So don't rush it. But yeah. Let me see. I stick by my rules, David. Only made $50 today. As much as I wanted more to make more, I didn't trade anymore. Really good stuff, bro. You're building a really good habit, and I promise you, just because you didn't make as much as you wanted today does not mean that you pretty much lost anything. You actually, built a good habit. Let me see. Is trading altcoins? I'm not even gonna read that. No, trading altcoins is not a good idea. Do not trade altcoins. That's the last thing you guys want to be putting. If you guys want to go over to a casino, you probably have a better chance of making money at a casino than you are trading altcoins. Is it altcoins or is it meme coins? I don't know too much about crypto, but if you're asking about like those Trump coins or like those, like the Pepe coins, you're not gonna make money off that. You're gonna get rug pulled. You pretty much, you're the exit liquidity, right? You guys know. I'm pretty sure it's for altcoins. Like, I don't know. I saw one on Twitter called Flappy, the Hawk Tool coin. Yeah, exactly. Like shit like that, bro. You're not gonna retire off that. You're not gonna make money. Yeah, that's why I don't do crypto. I stay away from crypto as much as I can. Bro, hundreds of rug pulls Yeah, it is futures. Yeah, NQNES is futures. Hundreds of let me see. Oh, altcoins is like Solana. Oh, okay. Yeah, so if you're gonna do like Solana, I think in Bitcoin, I don't know anything about crypto. If you're gonna do Bitcoin, I'm pretty sure that's safe, because it's like all regulated. But if you're gonna do something like someone said the Hawk Tuah coin or like a Trump coin or I don't know, I saw one called the Flappy Bird coin. You're just giving those people money. You're giving them your money. Like you're voluntarily giving them your money. They're gonna rug pull you and they're gonna make all that money, and you're gonna be left in the dust pretty much, right? Yeah, I'm not even surprised if that's a real coin. Um, Altcoins are kind of safe, but the Trump coins are all meme coins. Okay, got it. Yeah, I don't know too much about crypto, but I thought altcoins were more like meme coins. So, yeah, if you guys are gonna do meme coins, you're better off going to a casino and betting your money there. You have a higher chance of winning, right? Sure. Okay, if you guys go on Twitter with crypto and you guys are seeing all these like, oh, I just made 100K in a day with this coin. No, they're the owner of that coin. They got everyone to buy into the coin, right? By flexing wins, by flexing whatever. Brizzy, that is, bro. Even I'm pretty sure that's the Andrew Tate coin. I think he made it. He said himself. He's like, bro, I'm gonna rug pull this, and people still bought it. Do I trade options? I used to. It is not. I don't like options. It's not my thing to do. I really don't like options. Um, even off that you can make money, you need to do your research in a project first. Exactly. I mean, you could make money off of it, but the chances are super low, right? You're most likely gonna get rug pulled. Can you explain the definition of a bias? It's pretty much what you think the market will do, right? If you have a bullish bias, you think that the market will go up, right? If you have a bearish one, you think it will go down. How long did it take you to become profitable? About 2 years. 2 years actually. I paper traded for 2 years. I lost all my money in the first month of me trading, which it was enough money for me to actually say that, man, like if I learned this, I can actually make a living off of it. Here I am today. Right, so it took me about 2 years. Keep in mind, I learned by myself. I never paid for a mentorship. I didn't do anything. I learned all based off screen time, trial and error. You know what I mean? And 4 years later, here I am buying my dream car very soon. It's definitely in the works. I don't know if it's gonna happen yet, but I'm trying. I'm trying. Right? I'm gonna. Yeah, exactly. So guys, if you really want it, I'm not trying to like, really flex. I'm just telling you guys like, with trial and error, I promise you guys, trading will work out in your favor. Right? And that's why I'm here, pretty much every day teaching you guys. Right? Respect. Thank you, man. Thank you. So do I just do futures? Yeah, pretty much. I don't do options. I don't do stocks. I only do futures. Let me see. Isn't it good to trade Bitcoin because it's decentralized? I wish I could tell you I've never bought a Bitcoin. I've never done anything with Bitcoin or anything with crypto. So I can't really tell you. I know there's a lot of crypto people in here that probably make a living off crypto. They could probably answer you. But for me, of course, if I've never traded it, I'm no one to really talk about crypto, right? The one thing I could say is meme coins will not make you shit. That is the guaranteed thing. Drain Blaster's Pyramid is the best thing you could ever do. Well, thank you, Zay. Thank you, man. Thank you. What's bad about options that you prefer futures? It's not that it's lucrative. I think that's the word. It's Greeks. You guys know options has this thing called Greeks, called theta. If the option that you bought doesn't do anything for like let's say an hour or two, it's gonna start losing value, right? Throughout the day, as the day goes to end, even if the stock goes up, there's a slight chance that you're gonna start losing value in that option, making you lose money even though the stock is going your way, which is very annoying. I've had times in my 3 years of trading options, I have had times where the option goes to zero, even though the stock goes my way like crazy. Here, let me go ahead. I gotta accept all these friend requests. Don't think I forgot. I'm gonna accept all of them. But yeah. By the way, Miguel, I don't know if you want to still run it, bro. I see you still in here, so let me know. I'll literally do it on stream. I'll do it on stream, Miguel. I'm not kidding, bro. I'm learning. That's what's up, bro. That's what's up. And if anything, once again, guys, if you guys, of course, want to learn some more, maybe I have guides on everything. You can always check out the link in the description. It's all in there, guys. You can feel free to subscribe and check out all the stuff there. Right? I went ahead and sent the link there in the Discord. Can we look through another trade of yours, or would that be too much? Bro, Ben, I got you. Let me go ahead and pull this up. So, I'm going to go ahead and let you guys choose the trade that you guys would want me to pretty much review for you guys, right? This goes for the people on YouTube, and this goes for the people on the thing. Let me see. Is it smart to trade futures as a beginner? Yes. It's, in my opinion, I think it's the best thing you could possibly do. Can you trade MSS? No. MSS is more of a confirmation type of thing. You use MSS to have like a confirmation onto the setup that you're gonna trade. For me, I promise you guys, I only use fair value gaps and inverse fair value gaps for my entry. I don't use anything else. I don't trade breakouts. I don't trade reversals. I only trade fair value gaps. I use the breakouts and reversals as a confirmation behind my trade, right? So the more confirmations you have, of course, the better it is, right? So let me see, right? Let me open up my YouTube chat real quick. Okay, so let me go ahead and okay. So you guys choose the trade that you guys want me to review. It could be, the thing is, I don't know where to open up the chat. Let me see. Okay, let me just randomly pick one. I'm just gonna like scroll like this. Okay, I went on a losing trade. Okay, let me do it again. Okay, 30 points. I don't think that's too impressive. Let me just find a regular trade. Let me stop the bullshit here. Okay, let me see this one. But the thing is, reviewing the trade will take forever. That's the problem. If anything, you know what? It'll be easier if I just give you the link, because you know maybe some people just don't want it. Here, let me go ahead and give you the link to the video. It'll be right here. I'm just gonna give you the one from yesterday. This one right here. So we caught yesterday a 70-point trade and a 9-point trade. So it'll be this one. There it is. Where is it? Right here, Ben. There it is. Okay, so let me see. Let me put this over on my other monitor. How much is your signal room a month? I do it for 50. You can learn more about it in my YouTube description. I'm not gonna promote it here, because of course it's not my server. I don't have any room to pretty much promote. But if you do want to learn more about it, of course it'll be all in my socials, right? So it'll be right here, right? And then you could learn from it as well. And do I do XAU USD signal? No, I don't. I only do futures. Is it possible to lose infinity in futures? Yes, actually it is. If you're doing a live account, there is a good chance that, not a good chance, there is a probability of you going into debt. Yes, you can go into debt with futures, and you do need to owe the broker back money. So if one day you forget to fill your order and you go down $1,000 and your account is negative $1,000, you need to pay up, right? I don't know how they work around it. I've never gone into debt. I'm not trying to go into debt, so I make sure that I always cancel my positions. But yes, you can. With options, no. With options, if you don't have enough money to buy the contract, you can't lose anything more than you put in. With futures, yes, you can lose more than what you put in, right? So you are running that risk. Thank you. I'm new, of course, Troy, and welcome, by the way. David RP has taught me more than than school. I mean, you know, it's a whole different business model, right? School doesn't teach you about this type of business, I would say. So, yeah. Bro, Miguel, you've been a little bit quiet, bro. No, I'm just fucking. I mean, if you want to run it, I'm super down for it. Let me see. Oh, Sammy, by the way, I'm doing this in another Discord. I'm not doing this in my Discord. So for my Discord, that's why I'm doing the YouTube live with my face cam and all that stuff. And then, bro, let me lurk in peace. Bro, and then yeah, so I'm doing two servers, so I can help my friend, and I do, of course, the work over in on YouTube, right, for my server. So yeah, exactly. But yeah, let me see. Also, if you trade funded accounts and lose money, do you owe that money? No. If you guys lose the money on a funded account, you do not owe anything. You just lose what you paid the account for, which is usually like $30, right? So if you blow the account, which is a few $1,000s, all you don't owe anything. You just lose the account that you paid for, which is like $30, nothing more, right? So that's why, in my opinion, I always suggest funded accounts, as they're the smart thing to do. What is a funded account? Why do we have to pass a test to receive $50,000 funded? Can we just trade with our own money? You can, right? But for those that don't have money, you could buy one for $30 and they give you about $50,000. But before they give you that $50,000 to trade with, you need to pass a test to show them that you actually know what you're doing, right? You do the test a million times. It's called an evaluation phase. Once you pass it, you can get payouts, right? Whatever you make is your money. So you can make 1,000 a day. That 1,000 is yours. What's the 1v1 for? Bro, he was talking smack on Fort. You know what I mean? So I'll run it. David, you should live stream that 1v1. I'll do it. Do you use an automatic stop loss? Yes, I do. Anytime I enter a trade, I will always place my stop loss automatically. How do you get the profit if you're trading on a funded account? You request payouts, right? If you do, if you get a payout, of course, that's your money. They'll send you the money straight to your bank account. How do you deal with the 30% rule in Apex? Just don't go above it. That is, nothing more to it. You just don't go above the 30% rule and you'll be fine. How do you get? Oh, yeah, I already read that. New to trading, prop Probably a simple question. The idea of funded accounts doesn't make sense to me. I'm paying $30. Okay, so you're not actually paying for $50,000 of real money. It's in the name. It's called prop firm. It's prop money, right? So what you're doing is a lot of people, they end up, since the accounts are so cheap. Well, it was a Buddha for funded accounts. Since the accounts are so cheap, a lot of people just gamble the accounts and they make, you know, they either pass it or they fail it. Most people just fail it because, of course, if you're gambling, you're gonna make the habit of doing it, and you're just feeding the prop firm money, and they're not risking anything because they're giving you prop money. They're giving you a demo account. Now, if you actually pass that demo account and you get the payout, they're gonna send you money from their pockets over to yours because you guys had a deal. You pass the account, you get the payout, it's your money, right? But the reason they're so profitable from us, or not from us, from some people that like to full port, I'm not saying any names, but like a lot of people that like to full port or trade news or whatever, they're gonna go ahead and what's it called? We will go ahead and keep that. What's it called? You're just giving them money, right? What's a full port? When you put all your money into one trade. Someone told me about micro futures to limit risk. Yeah, I do micro futures. That is my go-to thing. That is my go-to thing. I always do micros. I never really do minis. I'm interested. They have so many traders. Their probability for success is higher. Actually, no. The probability for success is actually really low. Prop firms make millions of dollars a day. Why? Because people blow their account, they buy a new one, they blow it again, they FOMO, they revenge trade, they emotional trade, they blow more, they buy more. Since they're so cheap, you know what I mean? They just keep buying, making the prop firm a shit ton of money. Now, for the people that are good at trading, right? They have to pass the test. They have to get the payout. Then they get paid out, right? So yeah, no, prop firms are actually really profitable. That's how they work. What is a micro futures? A micro futures is pretty much 1/10 of a mini. So if you're trading micros, let's say with a mini you make $20 per point. With a micro, you're gonna be making $2 per point, right? So that's the case there. Can you do the trade that I took today? Like I said, you're gonna have to DM it to me, and I'll review it from there. David, make your own prop firm, bro. Shit, you need a millions of dollars for that shit, bro. What a platform is good for a funded account? Here you go. Here you go. Let me go ahead and send it over. Hold on, let me try to find it real quick. I know I sent it somewhere. Right here. It'll be this one right here. Top tier instigator. Bro. Hey David, how does taxes work when it comes to trading? It's painful. It's very painful. I'm pretty sure you sign as a, what is it? It's like a individual. I think that's what it is. All I'm gonna say is set 30%. Always set 30% aside for taxes. Cause you need to pay a lot. Not a lot to scare you guys, but whatever you make, you just save 30% at least. Is your IG name the same as your display? I have two IGs. I have my personal. I have my personal is this one. It'll be that. There it is. Can you send the payout over to a crypto wallet? No, I don't think so. I think it's only ACH. So they just send it to your bank account. Really appreciate all your knowledge, David. Thank you, man. Thank you. But yeah. What brokers do you guys recommend for Forex? I think My Funded Forex is a good one. I think that's what it's called. My Funded Forex, right? Let me see. My Funded Forex. Oh yeah, My Funded FX. This one. This is the good one for futures, or I mean for Forex. I don't know too much about it because I don't do Forex, but yeah, just follow. Thank you, man. What's the 30% rule on Apex? You can't make 30% of the overall payout, pretty much. Do you need a social security number for funded accounts? Yes, you do. You do. No, actually, no, you don't. You could have it, but they can ask for passports or they can ask for like other forms of. It's called KYC. Know your customer. They just need to know that you're, of course, above 18 and you know. That's pretty much it. Yeah, yeah. So you can do passport, social security. You could do what else? I think some other stuff. I don't really know too much about it. Damn, bro, you guys are following up hella fast, bro. That's cool. That's cool. That's cool. All right, that's cool, bro. You got kids? Nah, bro. Bro, I'm 18. I don't know kids, bro. If I had kids, I would not be here right now. I promise you guys. But yeah, let me go ahead and see real quick. Can you explain the 30% rule a bit more? I don't know too much about it. I just know that you can't make 30% of a certain number. I really don't know too much about it. Your girlfriend's account says otherwise, bro. No, not like that, bro. Bro, why you guys like doing your research, bro? No, I don't have kids, bro. It's a joke. It's a joke. Then David be dressing. Thank you, bro. But you got PAs? Yeah, I got PAs. I just don't make. I usually don't make over $1,000 a day, so I'm not breaking the 30% rule. Yeah, getting stocked right away. Yeah, bro, that's fucking crazy. Yeah, I have 13 PAs. I'm not gonna lie, I blew one. I was just fucking around with it. I blew one PA, so I'm down to 13 PAs. But I don't really care about them. I have one kid, well, that's fire. That's fire. I make around 80K a year with my job. Can trading really replace my job? If done correctly, you can make 10 times more from trading if you do it correctly. So yeah, I do believe you can. But 80K in a year, but that's a really good job. I'm not gonna lie to you. To make it simple, don't make more than 30% of your drawdown. Exactly. Exactly. I don't know how much the 30% rule is. I have to do my research on that. Your cat is your kid? Exactly. Yeah, yeah. So yeah, my cat will be my kid, I would say. I would say. But yeah. Uh But yeah, it kind of seems like we're caught up on the questions. All right, guys, I don't want to take up too much of your guys' time. We've been on here for 94 minutes, an hour and a half, right? So, guys, I'm going to go ahead and call it a class for today. Yes, it is all recorded. I will post it instantly as I end this class, right? For those sending me DMs, for those that want a mentorship, for those that want to join the community or anything, DM me, right? I'll respond pretty quick. And yeah, all right, guys. Good joining your bro. Thank you. JDY here. I'll send you a friend request. I'll send you a DM if anything. There you go. Okay, perfect. There you go. Thanks for the info. Thank you. I got you guys. I got you. Thank you. Has been an amazing class. Thank you guys. All right, I'll see you guys on Monday. That's when I'm gonna do the next class on risk management. In my opinion, trading shouldn't be your only source of income. Exactly. You guys need multiple sources of income. That is the goal here, right? Trading should not be your one and only source of income. All right, guys. So yeah, take it easy. Miguel, I don't know if you want to run it. I'm gonna stay on for a little bit, but for my YouTube stream, I'm gonna go ahead and call it a class. All right, guys. I'll see you guys on Monday. From those in the premium, I'll see you guys in the live trading tomorrow. All right, guys.